Hi friends, if someone asks me this question that Rahul, what are the 5 stocks that I would like to hold for long term, then I will select these 5 stocks that I'm going to talk about in this video. And more importantly, the 5 stocks that I'm going to talk about are from different industry or a different sector, giving a very good diversified portfolio. Throughout this video, I will reveal the names of the stocks as well as I will give you the rationale or the logic why I think that these stocks are good for long term, as well as I will give you the risk associated with it so that you get a balanced view about these 5 stocks. With that, let's get this video started. The first stock is from banking sector and the name of the stock is State Bank of India. I will give you 3 key points that will make my arguments about why I think State Bank of India is a long-term buy from my perspective. Point number 1 is extremely low valuation when it comes to State Bank of India. Have a look at my screen and you will see that I've selected top 5 Indian banks and I've compared their simple metrics on valuation, which is PE ratio and PB ratio both. And if you have a look at it, you will see that State Bank of India right now from a PE perspective is at 9.46. PB perspective is 1.42, while the sector PE is at right now 17.33 and sector PB is 2.35. The data that you're seeing is on ticker tape. You might see slight variation on P ratio and PB ratio depending on where you're looking at. And if we compare State Bank of India with its peers such as SDFC Bank, ICICI Bank, Kotak Mahindra Bank, Axis Bank, from a PE perspective, it is almost trading at 50% discount. And from a PB perspective as well, it is trading at lower than 50%. So from a valuation perspective, State Bank of India is really a good buy from a long-term perspective. Let's move to point number 2, which is all about profitability, and let us understand how State Bank of India is performing versus some of the other larger banks from a profitability perspective. So have a look at my screen and you will see that I've got Q1 2024 results in front of you, and you will see that State Bank of India have done massive improvements in their profitability as well as all other key parameters. To point out operating profit here, if you have a look at operating profit, they have improved their operating profit from YOY perspective, year-on-year perspective, close to 98%. And if I put this in some perspective and I show you ICICI Bank's comparison, you will see that from an ICICI Bank perspective, if we look at the Q1 comparison from 23 perspective and 24 perspective, it has grown by 35%. So 35% growth by ICICI versus 98% by SBI tells me that SBI's profitability is growing at a higher rate than ICICI Bank. Also, if I talk about the net profit, the net bottom line, then you will see that State Bank of India has improved by 178% year-on-year basis. And if we look at ICICI Bank, we will see that profit after tax here is close to 40%. By no means I am not saying that ICICI Bank is a bad bank. I'm just showing you the comparison between ICICI, which is very good bank, versus SBI. And my point is that the way SBI is improving its net profitability and margins is at a very high rate compared to other banks such as ICICI Bank. I've not picked up HDFC Bank for this analysis as well. I would have loved to do that. But main thing is that HDFC right now is doing consolidation of their balance sheet, P&L account and everything. So it's not the right time to compare both. But I have compared ICICI Bank and SBI and I've shown you that the potential growth that is coming from SBI is much higher. Point number 3 is the asset quality that State Bank of India has been improving over the years. Have a look at my screen and you will see that the net NPA, which is the bad debt, has gone down from 1% to 0.71%, which is excellent. Now, if we compare this from ICICI's perspective, ICICI's net debt is already very low. Have a look at these numbers, 0.48. There is very little room left for ICICI to improve these numbers further. But in case of State Bank of India, there is still a lot of room to improve these net NPA numbers. And moment the net NPA numbers goes down further, the share prices will go up because the asset quality will improve further from SBI's perspective. Because of these 3 points, I believe that SBI is set for a higher growth versus other banks in the coming years. Is there any risk with SBI? Let me also talk about the risk. And the risks comes from the bad debt again. And for this, let me give you a quick background. So have a look at my screen and you will see that In the last 4 to 5 years, SBI has written off loans like anything. The gross NPA used to be at around 11% back in 2018, and it has come down from that number to 2.78% in 2023. This is an exercise that Indian government really took with all the PSUs, where they asked PSUs to reduce their debt, write off their debt. And if we dig deeper into this bad debt, you will also notice that these bad debts come from mainly power sector, telecom, trading, infrastructure mainly, as well as agriculture sector. And if I show you, you will see that SBI's perspective, they still have infrastructure loan book as close to 13%, agriculture perspective 9%. So they still have significant exposure into infrastructure, agri sector, which is where typically the bad loans come from. So this is the risk that State Bank of India still carries, that their bad debt might accumulate over the years. But also remember that whenever that happens, Indian governments intervenes. Let me give you some data around that as well. So what do you see? Again, the same article that I'm using here, and you will see that in 2017-18, roughly 2,76,000 crore was infused into PSBs by government. This is government's way of giving capital to banks so that they can write off the loans. And the way it actually happens is that government will issue something called as recapitalization bonds, and the banks will subscribe to it, so that the banks get one-time relief from the bad debt perspective, and they can continue to pay the interest rate on these bonds. Again, all in all, the risk still remains. But what my point is that even if the bank accumulate bad loans, what happens is Indian government intervenes and tries to save the banks. In the last few months, I have couple of times announced my investments in SBI Bank through my YouTube member community. You may want to consider subscribing to my YouTube member community, because that is where I talk in-depth analysis on stocks, mutual funds, and many other assets that might help you in getting right information so that you can make some informed decisions. The second stock is from auto sector, and the name of the company is Mahindra & Mahindra. Have a look at my screen and you will see that from a valuation perspective, Mahindra & Mahindra PE perspective is at 18.12, where the sector PE is 64. There is a lot of room for this company to catch up with sector from a PE perspective, as well as PB perspective 2.78 versus sector PB of 6.21. There's a lot of room from a valuation perspective. Mahindra & Mahindra, in my view, is undervalued right now. But more importantly, what are the other key points? I'll give you 2 or 3 simple points that you will understand why I am talking about Mahindra & Mahindra as a good long-term prospect from an investing perspective. Number one is, have a look at my screen and you will see their last quarter's PAT, which is profit after tax, and you will see that their auto business has done more than 3 times of growth in terms of PAT. From 462 crores to roughly 1400 crores is what auto sector has given in just 1 year. That is more than 3 times of growth from their auto sector. Now the key point is, where is this growth coming from? This growth is coming from their SUV business. Have a look at my screen and you will see that in terms of the volumes, they are number 2 in terms of market share in the last 4 consecutive quarters. And from a revenue perspective, market share perspective, they are number 1 in the last 6 consecutive quarters. But as we always say that past does not guarantee the future, let me also present to you the future growth prospectus of SUV market. What you see on my screen is that right now they have open booking of 280,000. And just to put this in context, they are also every month pouring close to 48,000 new bookings, 48,000 new bookings per month. Now, if we were to compare their capacity of producing the SUVs, you will see that their per month capacity as of Q4 24 is only 49k. So they are not able to even catch up with their demand, because if they're only able to produce 49,000 here and they're getting 48,000 new bookings and they still have a backlog of 280,000, the main challenge the company has is the demand is very high from SUV perspective, but they are not able to cater to this growing demand. And that tells me that the reason they are presenting these numbers in their investor call is that they want to assure their investors that we are upping our production capacity because there is a huge demand from SUV perspective. And this is all happening because the consumer mindset in India is changing a lot from a SUV perspective. Have a look at my screen and you will see that Indians are borrowing for SUVs instead of homes, and that is the trend that is going on. And if we look at this data from loans perspective, you will see that on my screen that from a loan perspective, housing loan, which is the yellow line, versus vehicle loans, if you compare these two, vehicle loans are growing at a much higher rate than the housing loans. So people are even preferring SUVs as compared to homes. And this is what tells me that in the upcoming years, the growth SUV sector is still going to have, and the market share Mahindra and Mahindra is going to enjoy is going to be super, and therefore their share prices are going to do much better. Is there any risk with Mahindra and Mahindra? Is there anything that I do not like about this company? Yes, there is one thing that I do not like about this company. And for this, have a look at my screen again and you will see that Mahindra and Mahindra is not only in auto sector, they're into farm in terms of tractors and things like that, into services as well, where Tech Mahindra, they have major stakes in Tech Mahindra IT company. And you see the performance of Tech Mahindra is not very good right now. And in fact, Mahindra and Mahindra Financial Services as well is part of this conglomerate. And what I don't like is that if I have to invest in the auto sector, in fact, I'm investing in all these arms, which I don't like in person, because from a financial services perspective, Jio is coming into market. Bajaj Finance has been doing pretty well. So I feel like my bets mainly are on their auto sector and their EV sector. I've created a separate video on the EV sector, but all in all, Mahindra and Mahindra is one of the long-term bets that I personally feel is a good bet when it comes to the auto sector. So far, if you're liking this video, humble request to hit the like button. Also, you can consider subscribing to my YouTube member community for in-depth analysis on stocks and mutual funds. Let's move to stock number 3, which is from IT sector, the sector that I have been working for 16 plus years. So I understand a little bit about this sector. Let me now present to you the stock. The stock name is TCS, one of the very, very good companies in IT sector. And the reason I am saying TCS is a good long-term bet is because it is fundamentally very, very strong. Have a look at my screen and you will see that in the last 5 years, from an average net profit margin perspective, it is number 1 in the industry. From a last year's net profit margin perspective as well, number 1. From 5 years average return on equity perspective, number 1. From a return on capital employed perspective, number 1. All in all, fundamentally, it is very, very strong company. And that is the reason that it is enjoying very high PE as compared to other companies. But more importantly, what I really like about this stock is that have a look at my screen and you will see that this company is generating huge cash. You see, from FY 2022 to 2023, their cash position has gone up and their operating cash flow is close to 41,000 crores. And more importantly, if you look at this number, what do they do with this cash? 91% of this cash is what they divide or distribute to shareholders in terms of dividends, special dividends, buybacks that they have been doing, which is excellent that they are giving this money back to their shareholders in one or the other way. Also, point number 3 that I want to talk about is that from their customers' perspective, if you have a look at my screen, you will see that they have got close to 100 million plus customer. So they have large customers in their pocket. So in the last 4 years, 100 million plus customers have gone up from 44 to 60. 50 million plus customers have gone up from 99 to 133. And 20 million plus customers have gone from 215 to 291. Now, when this happens that a company is able to bag the large deals, such large deals, huge deals, what happens is these are multi-million, multi-year sort of deals. And whenever there is a headwind in the IT sector, companies like TCS will perform much better because they already have multi-million, multi-year sort of deals going on in the business. Therefore, they are less likely to get impacted whenever there are any headwinds in the IT sector. Is there any risk with TCS? Absolutely. As is the risk with entire IT industry, TCS also carries the same risk, which is if US dollar starts to weaken and rupee starts to appreciate, their profits will have impact. What you see on my screen is commentary from their senior management team that I have taken from their annual report. They believe that whenever this happens, that the rupee gets stronger, they are going to start looking at their contracts and bake all of this into their contracts. But I think the fact of the matter is that the moment rupee starts to become stronger and US dollars start to depreciate, there will definitely be some impact on their margins. But that is the risk that the entire IT industry carries. So if somebody is willing to bet on the IT sector, then TCS is no different. Before I move to stock number 4, let me know which is your favorite IT company from a long-term perspective and why do you think that is going to be a good bet in the long term. Let me know in the comments. I would love to read your comments. Let's move to stock number 4, which is from pharma sector, and the name of the company is Abbott India Limited. Have a look at my screen and I have compared top 10 pharma companies in India, and you will see that Abbott India fundamentally is a very, very strong company. Have a look at my screen and you will see that from a 5-year average net profit margin perspective, it stands out clearly, number 1. From 5-year average return on equity perspective, number 1. from 5-year average return on investment, 5-year average return on assets, 5-year CAGR from a stock perspective as well is number one. And also if you check the beta of this company, beta is the measure of sensitivity. For example, if the overall market falls by 1%, by what percentage this stock will fall? And you see the beta in the case of About India is extremely low as compared to its peers. It's only 0.15. So from a stability perspective, from a fundamentals perspective, About India is a very, very good company. Also, let me show you something very interesting. Have a look at my screen and you will see Sun Pharmaceutical Industries, one of the leaders in the pharma sector. And what you will see is that if somebody invested, let us say in 2015, they have not got any return so far because of this huge volatility in the stock, and this is the industry leader when it comes to pharma. Again, I'm not saying Sun Pharma is a bad company, but from a long-term perspective, we look at About India and you will see how in the last few years the company has been growing consistently. And the main reason for this is that they have been very, very consistent when it comes to sales and profits. Have a look at my screen and you will see from 2011 onwards, there has not been a single year where their revenues have fallen down. There has not been a single year where their profits have fallen down. Every single year, let me repeat, every single year their revenues have gone up, their profits have gone up. This is extremely, extremely consistent performance, and that is why I think About India has a very, very good future in terms of continue to make this growth. And the last point I want to make about India is that have a look at their shareholding pattern. You will see that their promoters shareholding is maintained at 74.99%, which is extremely, extremely good. Look, I'm not doing a deep dive analysis of About India in this video, but what I've done is I've given you gist so that you understand that out of these pharma companies, About India has been very, very consistent and has a bright future. Let me know in the comments which company within the pharma sector you are likely to be betting from a long-term perspective. I would love to read your comments. Let's move to stock number 5, which is from FMCG sector, and the stock is ITC. I've talked about ITC a lot on my channel, but let me quickly give you 2 or 3 points that will present my argument about ITC for a long-term bet. Have a look at my screen and you will see that in Q1 FY24, their cigarette business has done close to 7,465 crores. And if I show you the profitability of this segment of their business, is that they have done from a profitability perspective, they have done 4656. It is close to 62% profits. So from their cigarette business, they are getting a lot of money that all of us know. And the second point that I want to make is from their FMCG others business. Have a look at these brands that you see is likes of Ashirwad, Savlon, Sunrise, Bingo, etc. If you look at the results of this segment as well, you will see that 5166 crores is what they have done in revenues. But more importantly, if I show you the profitability of this, it has gone up by 111%. And this is not only in this quarter. If you look at the trend in the last 2 or 3 quarters, this has been a pattern that their margins in the FMCG other segment has been growing up like anything. Therefore, from a FMCG business perspective, ITC has a really, really good growth coming in the next few years. And this is one of the reasons that I really like ITC as a stock for a long-term perspective. But then comes the demerger news that all of us are aware already about. They demerging their hotel business. Let me quickly walk you through that. And I don't think that's a bad news at all. So if you have a look at my screen, from a shareholder's perspective, it does not really matter that the ITC is going to retain 40% stake in the new hotel entity, because if you look at from a shareholder's perspective, right now, if a shareholder who has 100% stake in ITC and ITC that has 100% stake in ITC hotels, how is that going to change? Simply, ITC will continue to remain 40% stake in ITC hotels. So let us say if I have 10 shares of ITC, I will indirectly hold 40% stake in the ITC hotels, because ITC holds 40% stake and I hold 100% stake in ITC. And I will also have indirectly 60% stake in the ITC hotels because of the shares that ITC hotel will issue me in the ratio of 1:10. So all in all, from a shareholder perspective, I do not think that it is a massive deal. Media has blown this out of the proportion. They wanted a clean demerger. I don't think there is any big deal from this demerger perspective. I still think that this is a very, very good deal from a shareholder's perspective. In the coming years, the risk remains the cigarette duties, for example, on their FMCG business. What I really do not like about ITC business is that if I'm buying 10 shares of ITC Actually, I am investing in all these businesses, FMCG business, hotel business, agri business, paperboard business. And to be honest, in the long term, what I see is that they are going to eventually demerge all these businesses and hopefully will list them as separate entity, unlocking a lot of value for people like you and me. And that is why from a long-term perspective, I think ITC still remains a very, very good bet. Let me know in the comments the stocks that you think are really good from a long-term perspective. I would love to read your comments. Also, you can consider subscribing to my YouTube member community because I post exclusive in-depth analysis on mutual funds, stocks, etc. and you might get benefited with that. Thirdly, I would request you to watch these videos after watching this video because that will help you understand a lot about stock investing. Lastly, a big disclaimer that please do your own research. Do not rely on this information that I'm providing you to make investment decision. Stock market is very volatile. You might lose a lot of money. So please do your research before you make any investing decision. With that, I will see you in my next video. Until then, keep rocking.